Hello everyone, I welcome you all. In this video, let's quickly understand what are we going to learn. Number one, we are going to talk about functions and importance of capital market. Number two, we are going to learn about Indian capital market and their growth. And number three, I'm going to tell about new financial institutions. The first one, functions and importance of capital markets. So totally 10 functions and importance of capital markets are there. One by one, we are going to see. The first one, savings and capital formation. In capital market, various types of security like a SAS or debentures. Yesterday itself, we discussed about this. Security means SAS or debentures. Okay. So these are the various types of security. So through that, the capital market help to mobilize savings from various sectors of population. Population means individuals, corporate, government, and etc. Okay, so the capital market allowed to collect saving money from the investors, from the population, from the people. Okay, for the business. Okay, so there are two futures are there. One is a reasonable return and liquidity in stock exchange. What is a reasonable return? So investor invested their savings money. Okay. So for that they are getting some benefit. That benefit called a dividend. Okay. So that is a reasonable return. What is a dividend? Dividend is a profit. Dividend is a profit divided and give to the shareholder. Okay. So they invest their money. So for that they getting the reasonable return. And second one, liquidity. So liquidity means so they can sell their shares immediately and then can convert like a cash. So easily they can convert the money in their shares. That is a liquidity. These two futures encourage them to invest their money in the business. Okay. So here they are mentioned saving. So saving for the investors and capital for the business. Okay. That is a savings and capital formation. And next, permanent capital. The existence of a capital market or stock exchange enables companies to raise permanent capital. Okay. So whenever they need a money, so through the capital market, they can raise fund from the investors. Okay. But investor cannot commit their fund for a permanent. The investors cannot commit their fund permanent. Why? So suppose one person invested the money in the XYZ company. So whenever he need a money, immediately he should be sell his shares to the another person. Then only he get a money. Okay. So investors may be changed, but through the secondary market company fund it will be rise permanently. Okay, so that is a permanent market. So investors may be changed, it's not affect the business, it's not affect the business. Okay, so by offering opportunity to investor to buy or sell their security, while permanent capital with the company remain unaffected. So the permanent capital of the company will be remains unaffected. That is a permanent capital. And next one, industrial growth. The stock exchange is a central market through which resources are transferred to the industrial sector. So what is the resources? The resources are the fund. The fund through the capital, through the central capital market, it will be transferred to the industrial sector. So if the growth of the company, it will be grow. So the same time the economic of the development also grow. So that is a industrial growth. Okay, the resource of the people transfer to the industrial sector. So the industry will be grow. So the same time the development of the country, the development economic also developed. So that is a industrial growth. The next, ready and continuous market. Okay, so the capital market or stock exchange, that is a central place for the buyer and seller. So the buyer and the seller, they can sell their product, they sell their securities, and they want to purchase their security easily. Okay, so there is a center place for the buyer and the seller. They can easily purchase and sell their security. Okay, and easily marketable compare the other asset. They can easily convert like a cash. For example, if you have building, immediately you cannot sell to someone and immediately you cannot convert like a cash. But if you have share in your hand, so through the capital market easily you can convert like a cash. Okay, so that is a ready and continuous market and reliable guide to performance. So capital market serves a reliable guide to the performance and financial position of corporate, and thereby promotes efficiency. Okay, so financial position of corporate. So if I want to purchase any company SaaS, I should know what is the position of the particular company, how much they have financially built. That should be I know. Okay, so the capital market give the guidance about this, so we can invest easily. The capital market serves a reliable guide to the performance and financial position of the corporate, and thereby promote efficiency. And next one, proper channelization fund. Proper channelization fund. So here the prevailing market price of security, the first one, market price of security, and relative yield and guiding factors of other people. Okay, so three things that capital market give to us. So the first one, the price of security. Today, what is the price of the particular security? And the second one, relative yield. So relative yield means, so if you want to purchase another security, so what benefit we are going to get? So that relative yield also it will be mentioned. And next one, the guiding factor of the people. So the last topic also we discussed, no, the guiding factors. So how much they have financially, what is the financial position of the corporate, so that also they will be mentioned. Okay, so this guidance to proper channelize the fund for the people. Okay, so there is a proper channelization fund and provision of variety services. So financial institution grants some variety of services. We are going to see one by one. The first one, grant of long-term and medium-term loan. What is a long-term loan? So more than 365 days or more than 1 year, it's called a long-term. So the medium or short-term loan means less than 1 year. Okay, and provision of underwriting facilities. So we should know what is the underwriting facility. So underwriting facility means, so when company called the public shares, public fund. Okay, so that time this type of company invested their money directly instead of the public. They purchased the particular company share. Okay, that is the underwriting. Okay, understood or not? So the company sell their shares to the public. So instead of the public, the particular institution, financial institution buy the shares instead of the people. Okay, so that is the underwriting facilities. Underwriting facilities. Okay, and next one, assistant in promotion of a company. For company promotion, it's work like a assistance and participation on equity capital. Participation on equity capital. So equity participation, it refers to the ownership of the shares in a company and also the property. Okay, so suppose you invested in the particular company, you are getting the ownership of the particular shares, and also you are the ownership in the particular property also. Okay, there is a participation in equity capital, not only in the particular shares and also the property of the particular company. You can get the equity and giving the expert advice. So the company giving the expert advice for the people. Okay, so these are the provision variety of services given by the financial institution. And development of backward areas. Development of backward areas. So capital market provide a fund for a project in a backward areas. So this facility economic development of backward areas were collected from the fund from the people and invested in the backward areas. So the backward area also will be developed. And so the next topic, Indian capital market and evaluation and growth. Okay, it's like a history from 1947 to 1973, the development of infrastructure for capital market. So during the time, they developed many financial institutions. So like IFCI, ICICI, IDPI, UTI, SFCS, and SIDCS. Okay, and after 1982, 1992, they introduced the debentures. What is the debentures? So instead of getting the money from the people, they are getting the loan from the people. Okay, so those are invested in a debentures. Those called a debentures holders. Okay, so it was introduced in 1982, 1992, and SEBI. Actually, this is a institution to form a rules and regulation for the small investors to help to protect the small investors. Okay, so they emerged as a effective regulatory body. So that is a regulatory body, that is a SEBI for the primary and secondary market. So measures of protection, so give the protection for the small investors. And new financial services such as a credit rating was introduced. So during that time, they introduced new service, that is a credit rating, and a study group for guidelines relating to valuation and a new instrument. So these are the Indian capital market and evaluation and growth. It's like a history, just read and understand. So and next, new financial institutions. So we are going to see about the financial institutions. The first one, venture fund institutions. Venture fund institution. In Tamil, it's called Tunigara Nidhi Niruvanam. Okay. So it's give the fund for the new product or innovative new project area. That product not in the world, newly they are going to created. So for that product, they invest their money. It's called a venture fund institution. So it's called a Tunikara Nidhu Niruvanam. Okay. So these are some institution name they are given. One is a Risk Capital Foundation. Risk, that is a Tunikaram. And a venture fund of IDPI, SIDPI, Technology Development and Infrastructure Corporation of India. Okay. And next, mutual funds. So the word mutual means the group of people coming together, it's called a mutual. What is the meaning of mutual? The group of people coming together, it's called a mutual. Fund means money. Okay, so the word mutual means the group of people together, fund means money. The mutual fund means the group of people putting their money together and buy a security like a shares or debentures. For example, so the particular share rupees 1000, but A, B, C, D, each one of have only 250 rupees in their hand. So they want invest their money in the share market. So they are together they are putting together in their money and purchase the particular shares. It's called a mutual fund. Okay, it's called a mutual fund. So financial institution that provide facilities for channeling saving for small investor into avenue the product investment are called a mutual fund. Okay, so the some financial institution they are giving LIC, UTI, and basic commercial banks, that is a SB and a Canara Bank. So the some benefits are there is a high return, easy liquidity, and safety and tax benefit. Okay, and next one, factoring institution. So factoring is an arrangement whereby financial institution provide a financial accommodation on the basis of assignment or sale of account receivable. Can I remember this picture? This picture in your 11th book, page number 156. Okay, so you already study about the factoring. The factoring used to collect the book debts of the particular client institution, collect the book debt. They collect the book debt. Book debts means that from the debtor they collect the money. Okay, so because of its client, that is a factoring institution. And some of the factoring institution operating in India are SBI Factors. Commercial Service Private Limited, a subsidiary of State Bank of India. Can Bank Factors Limited, a subsidiary of Canara Bank. And Over the Counter Exchange of India, OTCEI. The OTCEI set up by a premier financial institution to allow the trading of security across the electronic counters through the country. So in earlier, so suppose I purchased any SaaS, the giving the physical document. Okay, so now everything it was changed like a electronic format. Okay, so the OTCI provide a electronic counters throughout the country. Okay, so some problems they faced from in investors and medium sized companies, but it has the greatest strength for them. So what are the benefit? What are the strength? Transparency of transaction, quick deal, and fast settlements and a better liquidity. So that is a benefit of the OTCEI. And next one, National Stock Exchange of India Limited, NSEI. So it was established in 1992. So it will function as a model stock exchange. What is the aim of that one? So the providing the advantages of national wide electronic screen based scriptless and floorless trading system in the security. So instead of the physical document, they are providing a electronic screen. Okay, that is a use of the NSEI. And a national clearness and depository system. National clearness and depository system. Under the scriptless trading system, the settlement of transaction relating to the security take a place through a book entry. Okay, so they are giving the three segment. The first one, National Trade Comparison and Reporting System, which prescribe the terms and condition. Okay, so they formed some terms and conditions for the security market. That is your first segment. And second one, National Clearing System, which aim at determining the net cash and stock liability of each broker on a settlement date. So everything it should be particular date. And the third one, National Depository System, which arranged to provide the transfer of ownership of security. So what is the ownership of security? For example, I have 1,000 shares in the particular company. Okay, so I am the owner. I am the shareholder of the particular company. So I have the ownership. I have the ownership. So now I need a money. So I want to sell my product to I want to sell my shares to another person. So if I suppose I sold it to another person means my ownership, my shareholder ownership also transferred to the another person. Okay, so that is a transfer of ownership of security. In check exchange of payment, so when the particular person give a payment to me, so immediately ownership also change to him. Okay, so without any physical movement, so he no need to write any document, we no need to sign anything, so immediately it will be changed the ownership to another person. Okay, so these are the three segment. What is the first one? Prescribe the terms and condition, and the second one each on the particular settlement date, and third one, so ownership of security exchange instead of any physical movement it will be changed. Okay, and National Securities Depositories Limited. So it was introduced in 1996. So the aim is dematerialization as well as the rematerialization. So about this we are going to study about next lesson. So materialization means, so instead of the physical document, everything was changed like a electronic format. That is a materialization. Okay. And Stock Holding Corporation of India Limited, SHCIL. So SHCIL aims at serving a central securities depository
in respect of transaction on stock exchanges. The corporation also take up the administration of clearing the function at a national level. Okay, so SHCIL provide administration for the corporation at a national level. That is a SHCIL. I hope you understand about these three topics. Kindly read it in your book, and again, just to hear it, you can understand easily. Thank you for watching. We can see on the next video. Thank you, students.